Well, happy post-Christmas and pre-New Year, everyone. Hope you're all enjoying the festive season, getting fat and happy. I know I am with my celebrated chef here in London for the holidays. Um, at any rate, we've got also a Santa Claus rally going on, which is quite typical for this time of year. I wouldn't rely too heavily on seasonal indicators, as I've said before. Both Gil and I have reiterated that. But however, with QE on full blast, and with news items fairly light this time of year and people in a festive spirit, it tends to create these mini rallies that we're seeing in the averages. So it looks like we're going to finish 2013 with a fairly solid uptrend, solid to the eye, but not solid to the trader, since, as we've said many times before, this uptrend has been the most illusory one we've seen in the history of trading, and that also is backed up by the horrible, well, the performance of the market trend following wizards, which is a group of elite traders who've been managing other people's money for typically over 20 years, and they have been interviewed in books like Jack Schwager's Market Wizards, and collectively they've been down this year once again. I think this is the third year. This is the third year in a row that they're down. So it speaks to the nature of the challenges of this market. This year is perhaps the most challenging year I've seen on record, simply because the market averages just continue to leg higher in this deceptive uptrend, which makes trend followers and actually anyone who utilizes normal techno-fundamental methods, buying and then pyramiding their positions, it makes it very difficult for them. And as a group, most people, I assume, are collectively underperforming what the market averages have done this year, which is into the high, I guess, into the 20 percentile, well up over 20% this year in the Nasdaq and the Russell 2000, S&P 500, and so forth. So again, these periods do come to an end. The continued manipulation by the Fed and other central banks around the world is artificially propping these markets higher. So when all seems lost, these markets find their footing and start to continue their uptrends. And as you may have noticed, the market direction model stayed on its buy signal. It's becoming a bit more accounts for this quantitative easing that's been existing since 2009. But the QE has been far more present this year, which has caused the markets to have these trends, the shape of these trends that just continue higher relentlessly, even in the face of bad news and rumors that the tapering is going to begin and so on. As many of you remember, this year there are lots of rumors that the Fed was going to start to taper, and then even Bernanke said that they're going to start tapering no later than the end of this year, and of course that brought the market seemingly to its knees when it was off about 4 or 5% off its peak and looked like it was going to go a whole lot lower. But then, of course, that was the low, and the markets continued higher. And then, as far as leading stocks are concerned, we all know that there's been very few. For every Tesla out there, most stocks have not been pyramidable or have been playable to the upside in a way that is, say, normal. O'Neillian techniques and that sort of method. And it's become more of a day trader's market where you got to just pounce when you see the opening and then let go of your position, typically maybe that day or within just a few days. So this, what we call the Seinfeld market, everything's kind of backwards from what we're used to. And a big part of being successful in the markets is to minimize your losses when things go wrong, or just change your strategy and start making money. And this year has been in a way, I mean, overall, it's been good for both of us, Gil and myself. We've just reinvented ways of dealing with the situation, and some of our subscribers have too. As witness to some of the emails we've received. But I would imagine that most people have had a tough time. That's the sense I get, not just within our space, but also just in general in the investing world. And certainly here in London, a lot of people are licking their wounds because it hasn't been easy out here in UK or in Europe. I don't know where there has been a safe haven of investing using old styles. Gil, did you want to comment on that?
Yeah, definitely. We've already talked about this many, many times. The straight, boring pyramiding style of adding to stocks on the way up and building a big position as the stock moves higher has not really worked. And I've talked about what I've been doing, taking a shorter term, almost a day trading approach at times. And I'm actually finishing 2013, believe it or not, Dr. Hiss, it's my best year in 9 years. And but it's been a lot of work and a lot of trading. I've sent my trading blotter to my accountant 2 days ago, day before Christmas Eve, and he was like giving me a bad time about all the activity. But it's like, hey, what do I pay you for, pal? Anyways, but he was able to figure it out. In any case, just it's a lot of pages of a spreadsheet for those of you who download your year-end reports. So I was just giving him an early heads up on that, but I'm happy. It's been a good year for me, but my methods have varied quite a bit from what I might normally do, and the way Dr. K and I have managed money over the years when we were at O'Neill. I mean, I think back to, say, 2004 was a year that was the year that's comparable to this year for me, and I probably owned 100 different stocks and done 50,000 plus trades, whereas in 2004 all I owned back then was Google and Apple, and 100% each, fully invested on the way up, and that worked really well. And in this environment, that hasn't worked really well, and so I do think we'll get back to normalcy at some point, Dr. K, right? I mean, once this QE starts to diminish, assuming it's going to diminish, there are some saying that we're going to get some bad numbers going into next year, and the Fed's going to be back on full tilt QE. I mean, even the $10 billion they're cutting back per month is kind of pathetically minimal, and it shows that the U.S. government isn't going to stop issuing debt and growing the debt. The latest budget compromise or budget deal still ensures that we're going to continue increasing spending. So just digging a deeper hole, and we'll see how 2014 pans out. The other thing is Obamacare. I think there's a lot of hidden landmines in Obamacare. I really think the whole thing just points out two basic truisms. And number one, government at its core is incompetent, and you can't expect bureaucracies to do much else than become self-perpetuating. And so when they try to take over an entire industry, they're not going to get it right. I mean, they can't even get a website up. So I think they should just admit that they can't do it and let it go. But they're not going to do that. But that's the truism of government. It's incompetent but self-perpetuating. And number two, you should not pass bills that you can't read. That should be a basic rule for Congress, is if they cannot read a bill, they should not be passing it, or even considering it. The thing should be whittled down to something that's more manageable. And so we have all these surprises coming down the pipeline. There's talk that 75 million people will find themselves kicked off of their employer health insurance. So what you're going to have is a lot of these consumers getting thrown out into the so-called exchanges and insurance marketplace, paying a lot more. And I think this affects the consumer. And we've seen that to some extent in the Christmas season. Brick and mortar retail outlets saw pretty poor sales for this Christmas. There's one reason why I'm targeting retailers as shorts here. Today, actually, I'm out on top of Lululemon, which opened up this morning, in GameStop, which I think really sucks. But from a business angle, having been to their stores, and so I put those out as shorts today. The other thing I think about on the short side is what do institutions not want to show on their books at year end? So I'm looking at Lulu, kind of a bear flag, wedging rally here, and I'm hoping this thing breaks down today. Picked it off above 60 this morning. GME, you guys know I've talked about this one before because I played this move, and then as we turned here, taking my profits around the 150-day exponential moving average. Now we rally all the way to the 50-day yesterday, which actually was it was yesterday, and it reversed off the 50-day, and here it comes down again, and I think this looks pretty grim. So my guess is it heads back for these lows. I don't know how long that takes, but I think retail, if you're trying to find something to short, and I approach the market not as a stock market. I'm not riding the overall trend in the indexes and just being long and strong. what I do is move around and treat the market as a market of stocks, and I just look at individual stocks. You guys all know this. I mean, I've covered this so many times. It's kind of old at this point, but somebody asked. But anyways, let me get back to what I was talking about. With retail sales weak, I think next year could see continued slowing economy, or there's sort of non-recovery, that's phonied up in the numbers but doesn't really exist on the street, Main Street, that is. And I think that is a wild card for the market, and I think that I wouldn't assume anything. I just watch what the stocks do. Someone asks, since I talk a lot about what my techniques are and what I've done this year, and you guys have seen my handy-dandy, well, it's updating right now, so you can't see it, but my HGS Investor software that I've used to pick off stocks just when they're ready to start to move. But Dr. K, somebody says, we know what new techniques are you using? We know that Gil is short-term trading, but really have no clue what the mysterious Dr. K is doing.
I talked about it earlier this year about going to very short-term trading using volatility, and that's worked very well. And then I created also a longer-term version, which is in this kind of market, it doesn't work quite as well. In fact, I would say this year it's not a very good technique because, like we said, the market tends to sell off just to your selling point. But now that I worked that to accommodate QE on full blast, that's been fairly profitable, and you can notice by the UVXY performance on the website, which I'm trading. In other words, I'm trading it two ways. I'm trading it very short term, and I'm also trading it longer term. And the longer term has been readjusted since it is in beta, and that seems to be working fairly well. There's also a even longer term adjustment that I'm playing with because when you're in these environments where you ultimately are going to trend higher because of the manufactured money printing, it does very well for a long-term hold on instruments like XIV. And you can see that if you just sit on the thing with the idea that the markets are not going into a serious bear market gain in a year. For certainly not the website, you have to be your finger has to be on the trigger within seconds of the signal. Now I've done a theoretical model and also a real-time model. But the problem with the real-time model is I sometimes miss a signal if I'm not at the computer. If I'm away for 2 minutes, sometimes that's too much time and I've missed the signal. But for intents and purposes, I look at what my performance would have been had I nailed every signal right there on the spot, and also factoring into slippage and things like that. And the performance is very, very strong. We're talking exceptionally strong with minimal drawdown. So in terms of risk reward, that technique is exceptional, and I do believe it would continue to work even after QE ends. So I would like to certainly look into the possibility of how I could use this to everyone's advantage. I'm not sure yet because, like I said, it's a very short-term signal, but it does work. And the longer-term one is anyway more conducive to my style of trading. I'm not a day trader. I prefer, my trading personality much prefers to be able to sit on a position, like Livermore said, it's the big money's made sitting tight. That's what I like to do. It works for me. It's always worked. In this kind of market, it's working now that I've adjusted for QE and in all its huge effects. And I don't want to confuse anyone by, certainly the model had adjusted for QE in early 2009. And that's why the model is able to do well in 2009 and 2010. But 2013 has been QE en masse, massive amounts, more than the world has ever seen, from all these central banks, Japan, even Australian central bank. All these banks are printing like there's no tomorrow. So the debtor nations are becoming more and more in debt, slowly but surely, and the markets continue to get propped higher. And there will be a day of reckoning, and that will be that day. I should say it'll probably occur over a period of weeks because these tops in the market, when this market does finally top, and who knows when that's going to be. That might be next year. It might even be the year after. These tops take usually a while. They don't just happen overnight. So obviously the market direction model is vigilant and going to be watching for that. It has never missed a major top. It's always gone to a sell signal in the past, even in 2008, even in the flash crash we saw a couple years ago. there's always some indication of selling pressure, of normal selling pressure in the market that pushes the model into a sell signal. So hopefully it will not miss again, and it hasn't yet, and certainly in all the years that I've been running the model.
So, I mean, specifically though, what would be an example of the way you might approach a trade?
Well, on the short-term level,
what are the vehicles that you're using, for example?
I'm using VXX as sort of my proxy, and I'm using a proprietary blend of basically just moving average crossovers to signal buy and sell signals in the VXX, and that I translate over into XIV and UVXY. With UVXY, you can short it when you're going long XIV. They don't have a 2X XIV yet. Everything's 1X when it comes to inverse volatility. XIV is an inverse volatility. So in other words, when the market goes higher, it goes higher along with it. And I am waiting for a 2X. A 2X should be coming out, and that'll, of course, I'm going to play that because, like I said, the risk reward on these two models that I've been working with have been quite exceptional. So I'm going to just continue along and continue to gather more and more data, because the longer we go, the more solid the results become. So if people want to use these volatility indicators in a short-term way, I mean, again, it's a day trading method, and so you're going to have to create something that is conducive to your personality. Otherwise, you're more than likely to lose money. And I can't tell you what your trading personality is, but I will say that day trading volatility is probably gives the best reward and lowest risk, certainly in this kind of environment.
So essentially you're using ETFs. You're not messing around with stocks, individual stocks then?
I have. I played ONVO. I played Tesla. I played a number of names that didn't work out as well because it's been that kind of year.
Right.
And it's very important to keep your stops tight so that when I have lost money, it's been absolutely minimal. That allows profits to more than overwhelm the losses, which is, it reminds me in a way of 1997, when that market, I had my lowest success rate ever. I think I was just under 20%. Just under 20% of my trades were profitable. So I kept missing profits. I had to close out many trades at a loss, and yet I was still up triple digits that year, just barely, 102%. And it's simply because of the way I handled the winning positions. I mean, this year we've gotten letters from members that said, thanks for a great year. They handled Tesla just right, and that makes all the difference to one's portfolio. Even something like ONVO, which is a quick pop, but it did double in just a matter of days. If you played it when we put out the memo that this is your buy point, and then we put out a memo on the sell point, you would have had, you've been looking at virtually 100% gain in a matter of several days.
Yeah. And Organovo that had the big move, and now maybe it's setting up again. Did we have a pocket pivot yesterday? No, we did here.
We didn't.
This was a pocket pivot,
so it's Christmas Day, so we didn't have it yet. And it looks to me like it wasn't ready anyway.
Well, you do have one 4 days ago, so that would have been Monday, right here off the 50 day. So, I don't know. A lot of people
doesn't look quite ready though.
I think you got to keep an eye on this one though, because I'm looking at the weekly chart, and I do think it's constructive. You have some support here off the lows and here. Volume isn't real heavy. Had a big run up and a run down. It reminds me, this movement here reminds me of ACAD, which is trying to come up and out of here now, and you could see that it actually was constructive along the lows of the base. You got a supporting week here, where you close in the upper half of the range, and volume's picking up, even though it's down volume on the week. And you notice a lot of closes in the upper part of the weekly range, so that's telling you that's constructive and looking good. And then you got this ONVO. Looks to me,
I think it needs more work. If you look at the prior basis, it needs a few more weeks, and then tighten up, and then I'm going to be all over it again, like I was before.
And I think you got to keep an eye on this. Definitely, I'm with you there, Dr. K. And maybe this thing has a big move. But, you could use ACAD maybe as a model, because, it had the big run up and then the run down, and it's taken it since then, since the breakdown, we can count the weeks, 11 weeks before it's starting to come up and out of here and clearing this 25 resistance. It might actually even be viable in here. But that's looking pretty good. The biotechs in general have looked pretty good. I think Biogen is hanging along the 10-day, getting a volume drying up. I'm just watching this thing. I want to lay into this thing at some point. I believe I do, based on the way it's acting. That looks fine. Here's another one in Trexon. I don't know if anybody's been following this one. But it's starting to turn. Came public. It's very hot IPO. It's a couple of. There's some guy. His specialty is these DNA technologies, I guess. Dr. K, this might be something you would have a better handle on than me. But from what I can understand, they have a bunch of technologies, and they partner up with these other companies. I think they were partnering up with. I'm trying to think of the. Is it Biop? No, F. I'm trying to remember this one. In fact, I was at the urologist on Monday doing my final post-op operation checkup and got cleared and everything, and we were talking about a lot of. Turns out my urologist is a big follower of biotech stocks, and he's done pretty well with some. And this is one we were talking about a while ago, back in here when it was trying to flag. But I noticed now it's starting to turn. And I'm just trying to remember the name of, I thought it was FIOP or, I don't know. I'll have to remember later. But anyways, this is kind of interesting. It's trying to turn, get a little bit of a, this 1, 2, 3, 4, 5, 6, 7 days ahead of here on a pocket pivot type move. But to me, this is trying to turn. And you're at the 65-day, and it may come around. So, the other ones, the big ones, the three caballeros, as I call them, Celgene, Gilead, and Biogen. So Celgene in a V-shaped maneuver, might look for a pullback in here. You have Gilead also. Gilead's got this drug for hepatitis C, but another competitor is AbbVie, and the two supposedly are going to duke it out, I guess, on pricing. And that's why Gilead hasn't launched. It had the gap up on the news that at the FDA, it's Sovaldi, I guess the drug is. And then it didn't go anywhere. It pulled in. It got some heavy selling in here, but it's trying to set up again. So I don't know. I keep an eye on it. But the biotech area is, strong. And I'm just noticing today on my screen, ONVO is up, and Trexon is up, but everything else is pulling back a little bit. Alexion has been a good name. It's choppy, so when it runs up, you want to try and pick it off on pullbacks. It's like this breakout stalled, and it pulls back into the 20-day. Exponential roughly, and find support. So the ugly duckling theory is still definitely in force in this market. I traded some taser off the 65-day. It's reversing now, but that was a nice quick move up to the 50-day moving average, and this is still building a base. GoGo is a name I felt you could try buying it off of the. Notice how it. Undercuts the 50-day moving average and finds support at the 65-day exponential. That's the black line that's below the blue line. And it bounces, and it's trying to find support. You're kind of backing down a little bit. Insiders were clear to sell this thing. There was like 56 million shares that came loose on the IPO lockup last week, and they sold. There was one of the private equity firms unloaded. I think it was 27.8 million or 28.7 million shares or something like that to their partners for distribution, and they could do whatever they want. My guess is though people would not sell these willy-nilly and just cream the price and dump the stock entirely. I still think there's still potential for this area. There's a competitor. I don't know if they're a competitor. 80% of their business is with Southwest Airlines. That's LUV, L-U-V. This Global Eagle Entertainment, they were recently restructured, I guess, prior to, if you look at this, you can see this is kind of a boring thing over here, and now they restructured it, and now it's trying to set up, coming up in a flag. But they're going to make 73 cents next year. 80% of their business right now comes from Southwest, so I don't like that, but this is probably GoGo's going to have some competitors, and this might be one to keep an eye on. The one thing I don't like about this is you have 569,000 shares it trades on average, which is what is that, Dutch K, like less than 8 million, around 8 million.
Yeah, that's right around little less than 8 million.
Yeah, so it's really poopy in terms of volume. Whereas you can tell institutions are in this one heavily because this thing trades 2.5 million a day. That's, well over 50 million in daily dollar volume right now. So I'll be watching to see how this pans out. Now, some people ask me, is this a Head and Shoulders? Isn't this just a right shoulder? Well, it has that look right now, but a lot of stocks will just form a new base. I would point as an example, we thought ARM H was a big Head and Shoulders here. Remember this one? Here's your left shoulder, your big head on the weekly chart, and now it's forming the right shoulder. It looks like it's going to blow apart right there, right? But what does it do? It sets up again and goes higher. So, to assume that GoGo is a Head and Shoulders, a couple things here. It's kind of a narrow pattern, so it's really kind of premature to say it's a short. I don't think it is. We'll see how that pans out because it could set up in a base. I think all you have is this selling coming in from insiders who can dump shares now. And I think the stock, what did it come public at, Dr. K? Do you remember?
Let's
$17.
See.
So,
Yeah.
they got a nice 50% gain or whatever in it. I think they're going to lock some of that in. And so, you come in, you step in and buy some shares around the 50-day moving average, keeping the ugly duckling theory in mind, and it just undercuts a little bit, and so you load the boat here. You get a nice pop up into the 10-day and 20-day moving average confluence. So I think keep an eye on this. Maybe it does go sideways for a little bit, and then it comes off the 10-day on a continuation type pocket pivot. So I think that's definitely a possibility. So yeah, it's still in flux. There might be more insiders, but it sure seems to me that yesterday, you traded a nice 5.9 million shares yesterday. Somebody's sucking this thing up. If there are insiders selling it, somebody's buying it. And there's another, 4.5 on Christmas Eve, which was a half day of trading. So, somebody's in there sucking this up. And so it tells you institutions are in here probably adding to their position. The other thing to keep in mind is that there are 71 institutions that own 5.7 million shares. That's not a lot. And you actually had, let me see if this is right. I got mutual funds. I don't know about this data here. I'm showing 124 took new positions in the September quarter. So, there's people who bought this stock. Probably funds took an initial position with this influx of supply coming into the market. They may come in and buy some shares, and I think that's what's been going on. So I still think this is in play, and I think you might keep an eye on ENT, see if it grows up. It might be an interesting situation. So anyways, let's see here. In fact, I'm watching GoGo. Where's GoGo? Looking for, it's pulling back today, which I think it deserves to, but I'm watching my 620 chart to see if it turns back to the upside. Let's see here. Check my positions intraday. Okay, we're looking okay. Let's see. Somebody says, glad to hear your health issue has resolved. Yeah, it did well. So, but I'm only 54. It's not like I'm an old timer on the verge of death and having a weak constitution. I'm pretty healthy overall. So, let's see. Some stocks people want to ask about. Zeltec, Zeltique, I guess. These guys do an operation. I think this is the lap bands, isn't this, Dr. K? You know anything about this one?
CLTQ? No, not really. Let's take a look. Yeah, actually, this is really thin, so it's not really on my radar.
It's extremely thin, but I noticed it had a pocket pivot yesterday off the 10-day. So if you like these little thin,
and it's also, there's no earnings. There's sales aren't that impressive, and estimates going forward aren't all that impressive on the sales front. And earnings aren't. It's not going to go positive until mid 2015. So.
Right.
Yeah, I can see why it's not on my radar. In other words, there'd be a lot of risk in taking a position in this kind of name, especially in this market environment. And it has worked, but for everyone that does work, like this stock, there's going to be many that don't. So again, the odds are kind of against you in trying to land something like this.
Let's see. FLT. I think you use your basic rules on this. It's generally has tried to hold the 50-day moving average. So if it doesn't, if you get a violation of the 50-day, that would be your final selling guide right there. So I really think that's what you're dealing with. The other thing to keep in mind is it has had a long run. So if you own this for a while, there's nothing wrong with taking some profits, paying some taxes. It's okay. The government needs your tax revenue, and I can tell you this year I'm going to be paying a festive amount of taxes, but whatever. Dr. K, here's a question for you. Ready? Because you're half Japanese, so clearly you know everything about Japan. Because Japan has decided, it reminds me of when we went to New York with Jared Chow, a friend of ours, whose dad started Chow Telecommunications, if anybody's familiar with that. But when we were there, people, oh, you're Chinese. He's Chinese, and so oh, well, have you gone back to visit China? And
Do you know my friend over there?
Yeah, and but it's just the ignorance of, and of course, it's always white liberals who do this, and the ignorance of white liberals. I think that because if you're Chinese, you obviously are from China, and you have a little, triangular-looking little hat that you wear, and you walk with your hands together and kind of, in little tiny steps in your little robe because you're Chinese, But I thought.
It's funny. I mean,
you remember
it's
that?
funny.
It's like, well, where are you from? It's like, well, fourth generation Chinese. They're like, do you know any Chinese? And I said, yeah, he knows Go Lakers. But I just think it's so funny. I get the same thing. People ask, well, where are you from? Well, I was born in L.A. I'm fourth generation Mexican American. But if you watch El Pollo Loco commercial, they all think you talk like this. And this is stereotypes. So, of course, Dr. K, being half Japanese, you clearly know everything about Japan. Therefore, if Japan has decided to print to prosperity like the U.S., might the Japanese stock market follow in the footsteps of the U.S., basically forcing money into their marketing and causing it to rise?
An alien once said to me, "Oh, you're human? Do you know John Smith?"
Who knows? I mean, they've been printing money for what, 30 years?
Light years away and everything, so, maybe from your perspective, everyone knows everyone on this tiny little planet. But nevertheless, the question is a fair one.
It is a fair one. So, and I'm not saying that this person is being like a dumb white liberal who generally they patronize minorities. I get that one all the time because clearly my last name's Morales. I must be from Mexico. Right across the Rio Grande. I just swam across. But anyways, I mean, here's what I would say. But I'm not Japanese in any no part of me is Japanese. But I might I don't know. Maybe I am turning Japanese. But like that song from the 70s, Turning Japanese. I think I'm turning Japanese. I really think so. Is that how that goes? Anyways.
The vapors.
but again, I'm not saying that this person is exhibiting that type of behavior, but I do think it's interesting that, nobody ever asked me if I know anything about Mexico, which I've never even been to. But in any case, I think, Japan, let's look at, what's a Nikkei?
Look at EWJ if you
want.
EWJ,
yeah.
Yeah, that's
let's look at long term. But if we look at this long term, can I make it really small? I mean, this is Japan for the last. This is what the market. So they've been printing money since I don't know. I think they invented it, didn't they? And so this is what the market does. So they've been doing this for a long time. It's not like they're doing something new. But recently we went into what Abenomics, Dr. K, where Abe, the new prime minister, said we're going for it. We're printing like mad.
Join the party.
And it sparked a rally in the Nikkei. So yeah, I mean, this has the effect of driving markets higher, but it's been pretty volatile. I mean, look at this thing zooped all over the place recently. So yeah, but we know that's the same thing in the U.S. stock market. But the question is, what do you buy? And how do you handle it in terms of your approach to trading? So I think that's really the question, but it doesn't mean that you can just invest in the EWJ, although it does look like it wants to break out, and it's going to definitely go higher. But it does look like it wants to break out. So anyways.
Yeah, I mean, money printing is good for equities. We've seen this sort of behavior in various stock markets over the decades when a government prints too much and the equities will go higher overall. And we're seeing that in Japan, when Abe took over and, let's go and print like there's no tomorrow. I mean, certainly the markets have rallied. in Japan, and I would expect a continuation of that rally. I think they got ahead of themselves in earlier this year because they went straight up, and then they had to correct that excess, and now they've corrected it, and it looks like the Japanese market overall has been in a more and more constructive basing pattern. So it's a good observation that the market, it's not a bad idea if you want to take a position on a breakout out of this pattern.
Yeah, I also wanted to, just because this is a real-time webinar, I did cover my Lulu short. It shorted up here, broke down, and you get the 620 buy. So I covered it and took a little profit there. The one that's really working out right now is the GME, which broke down earlier, had a little pop in the morning, and then rolled over, and it's heading straight down. I really think this company sucks. So and so far the stock to me looks like it wants to head lower. But I just thought I'd point that out since this is real time, and that is it illustrates how I'll come in and hit a short and then take my profit or take a small loss, hopefully a small loss if it reverses on me. But you can see I picked on Lulu and GME today. GME is working better, so I'll stay with that one and see where we go with it. But so far looking okay there on the GME. So one of the things I'll watch for here is on your way down, you watch the bars, and what you'll get is a heavy volume and a wider bar than normal, and sometimes that's a short-term low. But just keeping an eye on this. As you can even see that here, you tried to cross and didn't really work. So sometimes I'll watch that, but it's not happening. And even you can see the MACD stretch, as I call it. You see these MACD bars, these pinkish MACD bars. They reach a sort of a extreme down here, but the stock doesn't rally, and you don't really get a turn. So it's not really happening yet. So I'm staying short. We'll see how this works. And I'm looking around right now to see what stocks might be viable on the pullback. Because my guess is that you're going to stay somewhat stable into the end of the year. I'm assuming that, and we'll see how that pans out. So I think that pullbacks are probably where you want to be coming in. But let me get to some questions because we got a pile of them. Let's look at SBX Starbucks, right? Good old Starbucks. Wait a minute, what happened here? No, is that right? SBX and possible. I think but
no. You have SBUX.
This is like SBUX possible short. I guess you could try and short, but the reason I wouldn't like it as a short is it's had a big move, but I don't know. I guess you could try and short it if you wanted to, but you don't even need to bless it. If you really want to short it and think it's heading lower, which it might be, then you would short it here using the 50-day as your stop. Lumber liquidators, I've been watching this. They've had a big breakdown. Clearly, you're starting to get a head and shoulders look to this pattern on the weekly. Let's make it look, so you can get a better sense of the scale here. And it's, you are wedging. So I've been looking at this here, and you're basically bumping up into the 65-day, the black line. Isn't that beautiful? See all those lines on there? It's really a cornucopia of moving averages, and I have to tell you, I can find stocks, they have support and resistance everywhere. So it really gives me a nice cozy feeling when I'm looking at my charts. But to me, these create bands to me. Here's your 65-day, 50-day band in between there, and you can see that kind of is a zone of support, and then it becomes some resistance here on the upside. Sitting sideways, I think higher interest rates are going to have a negative effect on housing and the related stocks. So this might be a short here if you wanted to hit it, with the idea that it's going to break down from here. You could do this in sort of as a two-stage short, rather, as if it rallies from here, because all you're doing is flagging. You ran up and you're flagging. You're not reversing very quickly. There's no heavy selling coming into the stock. We tried to pull off here 5 days ago, and you close off the lows, but finding some support in here. So maybe it goes through here and up to the 50-day and through this high, so it gets everybody all excited again. And maybe that's what you're looking at in terms of a rally. But you could try and short it here. But again, remember, shorting is going to work best when the market rolls over. There are always those exceptions where you have, like Apple in last year was a great short, even though the market in general was trending higher and there was no real big major bear market. So you want to have these in your back pocket and ready to go after them if the market starts to weaken. So Mellanox Technologies, very ugly, quack, quack. Yeah, that's pretty ugly. Not going to buy it, not going to short it. Taser is talking about that. Taser, it's kind of sucked. So to me, it needs to hold this area. It's right on top of this little flag. But again, it's trying to build a base. Stalled out last week. Volume picked up. It's not really constructive, I'd have to say. So it looks a little cheesy to me. I tried playing it here. I got a trade out of it, but that was it. So, but if things aren't working, you can always just dump them. I don't, I ask my stocks every morning. It's like, okay, why do I need to hold you? Tell me why I should not sell you right here and now. And that's my approach. Financial Engines is, I wanted to say Indians there. Engines, Financial Engines. I guess these are Native Americans involved in the financial industry. Is that right? Some more ethnic humor. Shall we go for it, Dr. K? Are we treading a thin line here? There's nothing really to say here. You had this pocket pivot here, and it's holding the 10-day, so it looks fine. Nothing really going on. Somebody says here, with Japan, they've been printing for decades. Now the market's running. Why didn't printing help it up until now? Yeah. Which shows, you watch the trend and let the trend tell you what to do. Let the price volume action tell you what to do rather than trying to come up with some macro theory that Japan is printing, therefore it's going higher. What does that mean? It means nothing, to me at least. 620 on ONVO, somebody says. Is that true? Let me see this. Yeah, it is getting the 620 turn here, so I don't know if that means... That's probably you guys. Dr. K said he likes it. We're looking at the pattern and showing how it looks somewhat constructive, and everybody's all over it. So, let's see, AMAT. Some of these old, MU's been trying to move. There's nothing really here that gets me too excited. AMAT's been moving up steadily. It's $17 stock. It reminds me of MU, which has been moving up steadily, and it's a $21 stock. Also, Microchip Technology has been, broke out of this funky flag. I think my favorite semiconductor is NXPI, though, which had this breakout on a pocket pivot move. And maybe has another pullback. Maybe this is some sort of ascending base. I don't know. But this one I like the best. So AMAT doesn't thrill me. How did the VOSI fund perform this year? We don't have a VOSI fund, so we don't have a fund anymore. Actually, I shut it down. I'll focus on getting the managed accounts running. But as far as I'm concerned, running funds is a big regulatory pain in the ass, and I do much better just running my own money rather than trying to run funds. So, and I don't even consider it really representative, given that it used the model of what one could have done in this market if one was responding to what's going on. So, Yeah, the ONVO is holding up pretty well. So just looking for some other things here. Some other names, I think it's kind of a mixed bag here. You look at Yelp. Yelp looks like it's breaking down here today, coming off. Still a very choppy pattern, not really all that thrilled with it. So, of course, iCloud is rocking. It's on fire. But if you were in the chat room a couple of weeks ago, I think it was this day right here, I said this looks like it might be viable off the 10-day moving average here on this pullback, drying up, and you got these moves up. And somebody said, well, this is a wedging rally, but you're actually dead wrong on that, because if you look at this thing as it's pushing up from here to here, that's not a wedging rally, because you have these way above volume, average volume spikes here on the way up.
Those are actually, technically speaking, those are bona fide pocket pivots. Those, for IPO companies, when they've been only trading a few weeks, that's what you can get in early on a pattern. So the first pocket pivot, which is legitimate, is December 3rd. Now the reason we did talk about it is because the volume on this thing is it's a very thin stock. The market cap on this at that point was something like 40 million or 50 million.
Yeah, but I was talking about it on the chat room, and I think
and that's fine. I mean, there are some speculative plays in this market that are bona fide, and this would be one of them. And and that yesterday, of course, we put out a formal report on it, but if it comes with a lot of risk, it's working. But keep in mind that there are a number that don't work in this environment, so you act accordingly.
Yeah, and I think but I was talking about buying it. Buy these on weakness when it's pretty quiet, and then it finally comes around. You had a couple chances to buy it here, but it's a restructuring. It looks like to me, because it was trading, excuse me, it's kind of choppy, and basically I think it looks to me like it's very, almost no volume trading. How many shares is this? Like 2 shares a day, 5,000 shares a day, something like that. And then all of a sudden something happened, and I'd have to look into this more. But it's doing great. There's a couple other ones. I like this one. This Sungi Mobile taking off here. It's another thinny. It's running. We were looking at FEYE, which is FireEye. It's trying to break out here. You might watch this. I've got an alert at 42. If it pulls in, I'm going to step in here probably. We'll see how that pans out if it does. But, looking interesting. These are interesting new names that I'm looking at. So somebody asked me, have you seen The Wolf of Wall Street yet? No, but I want to watch the movie. I just don't know if I can get anybody to go with me. I may have to wait for it to come out on cable. Looks kind of interesting. But, the movies, remember, it's Hollywood. And, to Hollywood, anybody who works on Wall Street is evil, even though Hollywood itself is probably the most brazen expression of predatory capitalism there is on the planet. You produce crap and sell it to people and make, these movie stars make $30, $40, $50 million a year, so they can afford to be lefties, since they're elitists basically. But to me, Hollywood exaggerates the whole Wall Street thing anyway. So I'm sure Leonardo DiCaprio is some evil guy and something happens, like Gordon Gekko. Anyways, PXD's Pioneer, is this look like a potential roundabout? Well, I mean, it's trying to form a base. It also looks like it could be a head and shoulders, so you don't know. But where are there constructive signs? Still under the 50-day, so it might need to roundabout more. I don't know. But, that's kind of the thing you're looking for, but you're looking for some constructive action in there, and I can't really say that I see that on the weekly chart, because you break down on heavy volume, you close in the lower part of the range here and here, so you're not really seeing any big supporting weeks. It's some here, so it's had to move up, but it doesn't thrill me. So 620 on Tesla right now intraday. Let's see, where are we? Yeah, some of these are starting to turn, but you might expect that. Given that we are at the end of the year, some of these names are going to get supported. So I should warn you, though, on this Gomo, interesting, whoops, not GOG, Gomo, here we go. It's a very thin name, trades just under 400,000. I'm watching GoGo here. I think this is going to be interesting. You're starting, you may be forming a bottom, because you hit a low here, you're kind of backing and filling. So let me see. Take a look at a couple of things here. Okay, let's watch this here, because I'm going to put in an order for to buy 5,000 shares at market, and let's see what happens. Okay, got everything at 39 cents, so it's holding right there. So we'll see how this happens. But this is something I might look for. Notice how you get the big bars to the downside. Your volume is drawing up. You're starting to get a turn in here, kind of a Wyckofffian test where you make a low and then you come back in. The volume is not so heavy on the selling intraday, and now it might turn. And this is something I've used repeatedly in this market. So now I'm short GME and I'm long GoGo here on an intraday basis. And now what? Everybody's buying GoGo? Okay, everybody, push it up for me. Thank you very much. Okay. Because now we're offered 44 cents, moving up here, bid 39. But yeah, like I said, I think this thing could turn in here. I think if you're looking at this and you want to try and enter here, you should have been coming in off the 50-day. But it might hang along the 10-day for a little bit and then move higher from there, but we'll see what happens. So in any case, I'm going to stay short something. Let's see, 2BGU stocks, AIRM, bear methods, yeah. This one worked really well. It's a thinner stock though, 347,000 shares a day it trades, but that worked pretty well. Somebody says, is it a buy point now or too extended? Well, if you know the rules of a viable gap up, there's your viable gap up. You're not going to buy it here on that basis. However, there is a continuation pocket pivot here and here. So you got two of those, so it's moving along. But it's very thin stock, not something I would play necessarily. Let's see. SLXP, Salix Pharmaceuticals, they recently bought Centaurus, and you did have a pocket pivot type move here. So that's where you'd be buying. These are extended now. So I don't think in either case, in either one of these stocks, you'd want to be chasing them here because you had your buy points in here. So, but again, very thin stock. Salix, though, I think is trading 889,000 shares a day. That's a little bit better. Watching GoGo here. So you're trying to get out. That's probably a few of you coming in there and buying some stock, right? Okay. Now remember, make your own decisions. I think the dumbest thing anybody can do is buy something just because they see me buying it. Besides, you're going to jinx my trade anyways, so be careful there. But anyway, in any case, we'll see how this pans out. Even noticing Lulu starting to come back down in here, so it's kind of in flux, the Lulu. But you could use the high of the day as your stop on the upside. So, any other questions? It's kind of a quiet time. You're coming in the end of the year. A little of this, a little of that. Twitter. Everybody asks about Twitter. To me, Twitter is a great stock because you can come in and buy it at the beginning of the day and then sell it at the end of the day and then come back and buy it the next day, and it's within range. But, this thing's going to pull back, and when it pulls back off the peak, you're going to get at least a 10% yank. So, you got to be prepared for that. It's wonderful on the upside, and when you own a stock like this, you never own enough of it, based on that move. And it brings out the old adage that, you never know how poor you really were until you start making a little money, and now you start worrying about how do you keep it all, So if you didn't sell yesterday, you could have sold, as far as I'm concerned, into any of these days and been out of the stock if you bought it down here on the IPO U-turn. And so you're coming in, where's your first point of support? Well, you could figure maybe the 10-day at 62.08, which is another, not quite 10% down from here, could be your stop. Another thing, let's just throw this on here. Where am I? I'm looking for a moving average. Okay, I'm going to throw in a 5-day here. Exponential, just to make it really fun. Let's see, what color should I pick? I'll pick purple. Nah, not bright enough. Orange, we already have orange. Let's see, how about, oh, I know, aqua looks good. Okay, we'll use that. So here's a 5-day moving average. You notice how the stock has followed it pretty well on the way up? So you could use that as a tight trailing stop sort of moving average if you wanted to. So you guys need to get in there and buy some more GoGo. It's not moving up for me. So in any case, but it's run up. So now you got to see whether this thing forms a flag. So I know there was someone on my Twitter page whining about how Twitter and GoGo and all these stocks with no earnings are, indicative of 2008 and 1999 and blah blah blah. And when it ends, it's going to end bad. But it's like, well, tell me something I don't already know. I made 1,000% in 1999 during the so-called .com bubble, and we got out of there pretty nicely in March of 2000, and the whole thing came apart. What I find is, even on Twitter, you get these sort of like cranks on there. They're mad because they didn't buy the stock, and so there's this sort of bitterness about a stock that's running up by Twitter. So if you don't own it, what do? You talk it down, and and could call it the greater fool theory. So my definition of a greater fool is somebody who's making money in a stock when you're not. And of course, the entire stock market depends on the greater fool theory. So the idea, in other words, the idea that if you buy something at a certain price, you're going to sell it to somebody else at a higher price, and theoretically they're the greater fool. And let's also keep in mind that stocks are just pieces of paper anyways. If things really got bad with a company and you own common stocks, guess what? You're last in line. The debt holders get paid off first, and so on. And I'm watching Lulu roll over again. I may have to come back after it, but I don't know. We're doing well with GME, so we'll hang there. But this whole idea where people miss a stock and then they want to talk it down and make it sound like the people who did invest in it and bought it right, are dumb or something or stupid. But if you bought Twitter on the IPO U-turn in here and you get the breakout here and you bought it on that breakout, you're making a lot of money. And, as far as I'm concerned, the greater fool is the one who didn't buy this thing. And there is no hindsight about it. You had a real-time signal in here on the breakout, nice volume breakout, and so you had a real-time signal to act on before it ran up, and so it's there. And so now where does it go? A lot of people are saying, oh, it's overvalued. If you go on, turn on your cable TV, people telling you that it's crazy, but they also will tell you don't short it because it could continue to run up. But what I would be watching for here is if you want to bag a profit, keep in mind keep in mind where your trailing stop is. My view is sell into a rally or use the 5-day here as a stop, because my guess is you are going to see it pull into the 10-day at some point, but the 10-day could be close to the 65 by the time that happens. And then you bail out, and then you let the thing set up again, because my guess is you're going to have to set up again if you're going higher. So that's really would be my approach with the stock right now. So anyways, somebody came late and they want me to talk about Taser, so I guess I will. But there's nothing really to talk about here. Stock's trying to form a base. It's been holding above the 65-day exponential. It has violated the 50-day moving average. So if you're in it and you want to sell it on that basis and then maybe come back to it some other time if it has a pocket pivot or rounds out a better base, because on the weekly I don't really see anything all that constructive. You have pickup in volume here, and maybe that's a supporting week, but you do have a bigger pickup in volume. It's above average weekly volume, and you reverse and close at the lows of the day. So that doesn't look so hot to me. Let's see, Netflix. Netflix has just been trekking higher. Now it's been moving up along the 10-day, 20-day. The 20-day has actually been where support has been. Now you're rolling over. That's basically what's happening there. But, I don't know. I don't think I'd buy Netflix up here. You had a pocket pivot, I think, in here. Was it right? Right in here, I think, yeah, and off the 10-day. But it's been, it's kind of a funky pattern. It's coming in, so I don't know. I'm not really interested in Netflix right now. But it's found support at the 20-day. So, I mean, if you're going to try and step in there, I guess you could, using that as a quick stop. WageWorks, we like the stock, and it had a pocket pivot, I believe, down somewhere in here, I think. And it's trended higher, but pulling in. Not really heavy volume today, just kind of hanging out. Nothing really there to say about it. Dr. K, have you done any research about shorter time frame pocket pivots, such as a 5-day pocket pivot?
No. I mean, I've done research in terms of all kinds of time frames, but including weekly pocket pivots. But what I divulged in our first book we published for Wiley is still stands as the best way to utilize pocket pivots.
Yeah, I've noticed. I've done a little bit of research on 5-day pocket pivots on roundabout type formation. So something gets oversold, and they can work. I mean, you can always try them out and you use a quick stop, but you have seen it in a few cases. But that's something that's very specific to the last couple 3 months, and also based on the ugly duckling theory. So I don't necessarily buy stocks on the basis of a pocket pivot. I may buy stocks on the basis of tight action. So one stock I'm got my eye on here, and we own a little bit of it already, is Workday, which had the pocket pivot here, and it's just holding up along the peaks. Notice how the last few days you had a big spin out I guess on Tuesday. I'm not sure what that was all about. Somebody came in and unloaded like 62,000 shares, and I guess they were in a hurry to sell it. Either that or they had the old fat thumb, where somebody hit the wrong button or put one too many zeros or something in the order and knocked it down. But you notice it closing at the peak. So I think this thing, nice little cup with handle, I think it's setting up to break out, but it may need to go sideways a little bit more. But if you bought it on the pocket pivot a few days ago, I think it was here, you're fine. You're just hanging out and see if the thing comes out of this base. Somebody said you started to show something about HGSI, but it was updating. No, I was just showing how I've been using that, handy dandy. My handy dandy. Where is it? Whoops. My secret weapon bar chart. Is that cool or what? But when I was looking at Twitter down here, you're starting to see, in here, you got this blue, which is a kahuna, and you can see things all starting to flip over blue in here. So when that happens, that's when I'm starting to come after it. And I think the same thing happens with a number of stocks. Let's look at Workday, for example. You're seeing this is starting to get blue here on the 2-day force, and it's been streaking blue since then. So I think this looks like it wants to go higher. So the go-go is starting to show a little bit of blue here, but still, this is as of yesterday. Remember, it's updates after the close. But you could see this guy getting it nice and blue in here just before it launched. That's when we put it on as a pocket pivot, and then the next day it gapped up. But that's basically, this has been my secret weapon, and it picks off things when they're going to start to move most of the time, and it has worked pretty well. But most of the time I'm taking 5, 10, 15, 20% out of my stocks every time, and working them that way. So it's been very active. You're not really. I mean, there used to be times, like I remember in 2004 when I'm long Google and Apple, I could be out on the golf course with my cell phone at the time, which I think was a BlackBerry, and you'd have eSignal on, and you can watch your stocks, and hit you with an alert if something starts to come off a little bit. But you didn't have to have your face in the screen, and you do now. So even though I've done very well this year with stocks, it's been a lot of work. So I'm ready for a break. But as Gordon Gekko said, money never sleeps. Anyways, it's a little after 9. I don't know if there's any other questions here. I expect things are going to be quiet. You see things look like they're going to sell off, and they'll come in. There'll be some tax selling and whatnot. But I think that things will stay positive into the end of the year. And so I think you want to be looking around for opportunities, pullbacks, things like that, to come in, and that would be the main way to operate here. But again, the other thing you do is just bag it for the year and relax and take some time off. Let's see. Bida, that had a pocket pivot yesterday. So that's a little smaller Chinese stock, but that looks like it wants to go higher. ATHM is Auto Home. This is a new an IPO, and it's very, very interesting, but too short of a pattern for me to step into. But that looks good, I would have to say. Let's see, and also Cali, China Auto Logistics. I personally, if you're going to get into little Chinese stocks, that's a cheap little $3 stock, this one. So I'm not going to mess with that. I like this. I just like the, I like the symbol WUBA. It sounds like some sort of, I don't know, something from the movie Madagascar. Anyways, but that looks kind of interesting. Had a big run up coming around. You get this sort of pocket pivot move coming off the 10-day here, and it's turning, but still very thin stock. Valiant, nothing really there. Here's a pocket pivot here. It's trending upward. It looks okay. Nothing really special there. XRS. What's XRS? Oh, what is this one? I've seen this one. Had a nice little break on Christmas Eve here. What is this? Dr. K, you know anything about this thing?
Chinese stock.
TAL, yeah, that was the one I saw there. Looks interesting. I think it's a really thin trader, though. Average daily volume is 386,000 shares. So a lot of these Chinese stocks are like that. I was showing you the Gomo, and I just figured, if GoGo was good, then Gomo's got to be good too. I mean, it's just one letter difference, right? Stock's moving today. I was thinking about buying it this morning. It was sitting around 1945. I actually should have stepped in and picked up some shares. Well, maybe the GoGo will turn for me. So, but in any case, I'm making a little more money today, so my accountant will be happy about that. Align, somebody says. Align, it had sort of a pocket pivot in here. Was it here? No, it was here, but it's a little extended from the 10-day. Maybe right there, but it's trying to set up again, so it doesn't look half bad. But you have some supporting action in here, so it's trying to set up in a new base. It looks okay. I mean, we were on the chat room. I think I was talking about it in here, and that you could potentially try to come in and buy the stock off of the lows here. Using the 50-day as your stop because it's pretty close. And it's starting to come up out of there, so it's doing okay. And I think that Danaher came in and dumped 4.8 million shares that they had gotten down around $10, I think, when there was some lawsuit that they settled with Align Technology, and they come in, they dump it, knocks it down, gets everybody scared, and then the stock just slowly rebuilds. So it looks fine to me. Oh, let's see, anything else? Someone says, Happy New Year to both of you. What are you guys doing for New Year's? I'm watching the Rose Bowl. So Stanford's in the Rose Bowl this year against Michigan State. By the way, Dr. K, I don't know if you owe me $1 from the big game. Stanford beat Berkeley. I think it was like 72-6 or something like that.
Yeah, sometimes those numbers get pretty massacre.
Yeah. Well, I think the difference is this year Stanford is really good and Berkeley doesn't really have a very good.
Yeah, and they kind of switch off.
They'll come back. They'll come back. We know. It's been back and forth over the years. I know, but I just wanted to let you know that you owe me $1. So
Okay,
pay
but
out.
doesn't that nullify the? Oh no, that doesn't nullify the sushi lunch that you owe me for that one stock that.
I thought you owe me a sushi lunch. Okay. Oh wait, that's right. That's right. Okay. All right. Well, you got to come and collect, pal. In Vansense, to me, it's looking like a Head and Shoulders. I don't know. The people are talking about they're going to get a contract from Apple, so. Maybe they are, maybe they aren't, but I think in general, not a stock I'm interested in messing with. It's really been a pisser, as I like to call it. It just frustrates you. It'll look like it's doing well, and then kaboom, we get whacked. And now it's, to me, looking like a big Head and Shoulders. Well, not a big one, but definitely a Head and Shoulders type pattern. You're at the peak here, so I don't know, maybe it's a short. In fact, I think I tried to short it. I think right up in here around the 50, I tried to short it, couldn't borrow it. So, but it looks like... looks good. Anyway, someone else says, Happy New Year, guys. Thanks for all you do and share. You're welcome. I'm still planning on doing a webinar and go through what I'm looking at every day on my HGS Investor. Also, I'm going to be a guest presenter in the February Market Roundtable that HGS Investor puts on. So you guys might want to join that. We'll let you know when that's happening. But that'll be in February. They'll be here in no time. But again, I think the system is working for me. They now have this view available to all users. Not that you have to learn to use it too. Everything is contextual, as Dr. K likes to say, and you have to learn how to use these things and get a sense of what they're showing you just by looking at so many charts. And then I look at every night, what I look at here is I go to the smart groups here, and Ian Woodward and Ron Brown. That's Ron and Ian. Stocks and groups moving to the upside, and just run through this. And I got to tell you, how did I find iCloud under $10? It was here. Taser and Solar City when it was around 19. Tesla when it was around 44. Here. Because it wasn't showing up in IBD because they didn't meet they didn't have the proper ratings. But in this market, you've got to think a little bit outside the box and not be a robot. And I think it has been a profitable year on that basis. Anyways, have we had any pods this year? Seem to be missing. No pods. We're in a QE market, punch bowl of death type of topping formation. But no, we haven't had any of those. all year, and there have been a few that they look like they're going to start panning out on the downside, and they don't. They end up being cups with handles, and they end up going higher. And I just think it's a function of the market. We'll get to a bear market, and when we do, we'll be on top of it with short sale setups. We haven't been putting out a lot because the bottom line is, if there have been short sale setups, they've been tactical in nature and not necessarily strategic, because you haven't been in a bear market. But I think you'll get there, and when you do, I think you're going to make a ton of money. And I think also the market direction model is going to make a ton of money. So I think you want to be there when that happens. Anyways, we will have another webinar, I guess, next week, and possibly I may do one on Monday or Tuesday in the evening, my time, after I've updated my HCS Investor software and take a look at things and get a sense of what's happening there. Anyways, I think that's all we've got today, everyone. Thanks for showing up. I know it's a slow time. And I have nothing else. You got anything, Dr. K?
No, it's just happy holidays, everyone, and get ready for the new year.
Yeah, I think it could be a good one, so we'll see what happens. Anyways, take care, everyone. Have a happy new year. We'll catch you later.